he is the one wanting to simplify the investments journey for you today. So, Rona,
All right, thank you so much, Joshua, and good afternoon, everyone. Nice to have this session once again. Hussein, please permit me to share my screen so I can proceed. Hi, can anyone confirm that they can see my screen, please?
yes, yes.
Awesome, thank you. So the session today, how to rebalance your portfolio. It may not sound interesting to you, but it will actually help your investments generally, optimize your returns, and most importantly, minimize risk. So it's very important. This session will be a very practical session, very, very practical. So we implore you to, if possible, to pay attention and watch your screen as we progress. The slides are very short, less than around 5 slides. That's all actually, but it's mostly practicals. On Monday, the recording of this meeting will be shared. So if you want to revisit it, you can always revisit. Now, this session, like Joshua rightly mentioned, is brought to you by Access World. And Access World, we are here to simplify your investment journey using our platform, etc. However, if for any reason you still need the personalized guidance, you can always reach out to myself or Benita. We are chatted and we can give you the professional help that you need. So long as you are a long-term investor and you are an annual subscriber in the Access Works platform. Thank you. So these are the contents, very short. The Let's Construct a Portfolio will be fully practical. Then we'll show you what portfolio rebalancing means, why it matters, then how you rebalance your portfolio, including what to consider. Then that will be all. After which we'll consider all the questions that you have asked in the form, as well as questions that you have during the class. So while I'm teaching, while I'm speaking, if you have any questions, you can note them down. Then immediately after the end of this class, we will raise the mic open for everyone. So if you have any questions by then, you can ask. However, if you have any corrections to make regarding what I'm saying, or you have some doubts, very important ones. So, just you can disrupt me by then and let it know. But if it's a question, just wait until the end of the class. Thank you. So the practical session will be starting with, because before we have to rebalance a portfolio, we need to construct one. So it's more like a basic. Portfolio construction is very simple. Let's say you are just starting to invest. So what do you want to invest in? Or let's just focus on stocks for now, because investment is wide. We are looking at commercial papers, we are looking at mutual funds, we are looking at treasury bills. So let's just focus on stocks, right? Or ETFs, stocks and ETFs, right? So which stock do you want to consider? So mind you, before we go on, we in this session, we are assuming that everyone here has already started investing. Then secondly, everyone here is investing in a fundamentally sound company. So by fundamentally sound, we mean that it's not a company that tomorrow you hear that they shut down, or tomorrow you hear that something very bad that is avoidable happens. I'll show you how to spot those companies, but this is our assumption that in your portfolio, you already have fundamentally sound companies. So we're not looking at to remove the useless companies, useless stocks from the portfolio. No, that's not the purpose of this class. It's for you to rearrange the fundamentally sound companies that you have. So before we go ahead to construct the portfolio, let me show you how to find some fundamentally sound companies, right? So this is the AccessWorks platform, and thankfully, the latest feature that we all know is in this fundamental analysis, right? So for you to find some fundamentally sound companies, if you already have something in your mind, so maybe MTN, so you just click on the specific asset and search for MTN. So you can use our default screener to see some things that MTN passed or failed. So in the case of free floats, MTN does not have up to 20% free floats. This is the reason why it is showing as failed here, right? Because we set it that the free float should be above 20%. Then for the debt to equity ratio, we all know what happened to MTN in 2024, where their liability, the debt generally superseded the equity. So it is still on the high side. Assess what for the purpose of helping keep investors safe. We usually look at companies with debt to equity ratio lower than 1.5 or so, but this is greater than 8, so it's significantly high. So I really did not want to say this now, but let's look at it. If the debt to equity ratio of MTN is like this, and a significant part of MTN's debt is in dollars. You know that this is MTN Nigeria, right? MTN Nigeria. We are looking at how to analyze a specific company, right? So yeah, this is for MTN. So we are looking at the risk. We are looking at the risk associated with MTN. It's still, significantly high. And considering these issue tensions in the world, the inflation rate can go up because when oil prices go up, it means that logistics will go up. Then everything that we have to transport from one place to another, such as foods, etc., they will go up. Then in the case of MTN, remember here in Nigeria, we do not have lights. So most of the masks are what? They are powered by fuel. So when fuel price goes up, then MTN's their expenses will go up as well. It significantly goes up. So what this means is that this debt to equity ratio is something that we must consider, especially with regards to inflation, interest rates, exchange rate, and yeah, that's it, exchange rate. But now this is if you have a specific company that you are considering, right? Now, if it's for the general market, now we have some templates that we can use. Like I rightly mentioned, we use Versus Watson template. So if you want to see all the companies that fit our templates, you apply this, you select this Assess What screener here, then apply it. When you apply it, you see the different companies. These are some fundamentally sound companies, right? They fit Assess What. However, if you do not trust our own or you want other opinions, you click on Choose a Template. Then you can select Warren Buffett's own templates. If you have read the book, The Intelligent Investor by Benjamin Graham, right, you can actually find the templates there in pages 184. So this is the template, this is Benjamin Graham's template. You see the companies that fit it. You can always change from Nigeria to United States to see the companies that fit it, right? Yeah, so this is Google, ABT, etc. Now, if you already have some things to consider, so maybe you want companies with their market capitalization greater than 750 billion. So comparison greater than or equal to 750, 1, 2, 3 thousand million billion. Then you also want their PE, or let's say their price to be less than 100. So add another. So we say with market cap greater than 750 and price less than or equal to 100, right? Then maybe we could also add free floats and free floats percentage, right? Yes, greater than or equal to 20, right? Make all of them required. So if all is required, then it's only companies that pass all that you will see. When you fetch, you see the companies that fit. Okay, none fit for now. Let me see if I did this correctly. So yeah, 750,000 million billion. Okay, let's say this one 150. Just for all right. So we see, oh, this is let me go back to Nigeria. So we see some. All right, so these are some companies with market cap greater than 750 billion, price less than 150, then free float greater than 20. So I've showed you how to get some fundamentally sound companies. For the purpose of this class, please help me confirm that you can hear me, Joshua.
Yes, I can hear you.
You are loud and
Awesome,
clear.
thank you. Awesome, thank you. For the purpose of this class, please, let's use MTN, Aradel, and Access Corporation, right? So I want to first construct a portfolio in a blank Excel sheet before I show you the simpler way that you should have done this. All right, so we'll consider the first price. For the purpose of this presentation, let us assume, please, Wilson, confirm that you can still hear me. Wilson only. Let us assume that we'll be buying the stocks in the first day of 2020
Yes, I can
of
hear you.
2026. Awesome, thank you. Let's confirm that we'll buy the stocks in the first day of 2026. Then this is where the first price will be. Then the current price will be like their closing price up on Friday. The units will be how many units we can buy if we want to spend 100,000 on each of these stocks. So that will be here. So let's do that. So starting with MTN, search for MTN on Access Words, right? You can see the dividend yields, the effective yields.
Hello, Elijah.
I can
We
hear
can't see
you,
your
Wilson.
screen.
Can you
We
share
can't
your
see your
screen?
screen, please.
You
Let me
share your
share.
screen again.
Oh, I thought that you were seeing my screen. So sorry.
No, we could see your screen previously, but I was just trying to mitigate that issue that occurred before. So I think that was the reason. So we share your screen, please.
I have shared it. Can you see it now?
Yes, yes, we can see it.
Awesome. So this is MTN, right? This is MTN Nigeria. You can see the dividend yields, the effective yields, the PE ratio, etc. But while we are here, is we want to see the first price of MTN in 2026 as well as MTN's current price. So coming here, show technical view. I just love to do this. You can either do it like this or you search for the price using this calculator. But because of time, please, let's just get this. So last day of 2025, the closing price is 511. So here will be 511, right? Then MTN's current price is what? 790. All right, the next one is Aradel. Yeah, so the closing price of 2025 is 670. So 1,300.4. So 670, 1,300.4. Right? Then finally, Access Corporation. This one is the favorite stock of some people. So coming here, the closing price of 2025. So when I say closing price of 2025, it's the same thing as the opening price of 2026. Yeah, so 21 to 25.95. 21. Awesome. So the units. So we are saying 100,000. We want to give 100,000 naira each to these three stocks. So equal to 100, right? Divided by the price as of the starting of 2026. But considering that NGX does not consider fractional shares, let me round it down. So rounds down, right? So with this, we have 195 units MTN down to this. Awesome. So I spent around 99,645 naira on MTN, 99,830 naira on Aradel, then 99,981 on Access Corporation. So initially, look at this column F here, right? Initially, MTN is around, all of them are around 33.33. You know, when you divide 100 by 3. So MTN around 33.28%, Aradel 33.34%, then Access Corporation 33.39%. So 33, 33, 34. Then based on their current price, so this their initial proportion is when you use this their first price. But now based on their current price, that is this one multiplied by the units will give you the current what? Here you go. So the current price multiplied by the number of units that we have will give us the current what? Which is what? 154,050 naira per MTN, around 193,000 for Aradel, then around 123,000 for Access Corporation. But guess what? You can see it apparently here. The from 33.3% that MTN was, it's jumped, it's now around 32%, still close. For Aradel, from 33.34%, it became 41.11%. Then for Access Corporation, for 33.4%, it is now 26%. So what are we observing here? MTN is like the average, right? Then Aradel's own proportion significantly skyrocketed. Then Access Corporation's own proportion significantly reduced. So Aradel increased by around 8%. Access Corp decreased by around 8%. Then MTN decreased by around 0.5%. Your portfolio, when you started the trading, that is early this year, which is 300,000, but it's around, look at it, 299,000. But the current worth is 471,000. So your portfolio has made a total return of 57.4% as of the few less than 3 months that you were buying. However, if you had invested this 300,000 that is here, if you had invested it only in MTN, your portfolio would have given you 54%, which is around 462%. If you had invested only in Aradel, it would have given you as much as 94%, which is around 581,000. Then if you had invested in only Access Bank, it would have given you 23%, which is around 370,000. So what are we seeing here? We are seeing that diversification is the reason why we do not have 370,000, something as low as 370,000 and something as high as 581,000. However, we have something in the average, somewhere around 471,000, still close to where MTN is. So that is one of the issues, because we started the portfolio on equal grounds. We gave all the assets equally, that this is equal proportion for all of you. Then I think Access Bank had 33.4%, the other one's 33.3% each. But now Access Bank's own proportion has gone down. Then that of Aradel has significantly gone up. That of MTN is still somewhere in the middle, still very close. So MTN is like the average of the portfolio. So this is where portfolio rebalancing comes into play. Portfolio rebalancing is when we intentionally want to take the portfolio back to the way it was. I'm not telling you to reduce the amount from 400 and something thousand back to the 300,000. No, your portfolio will still be worth that 400 and something thousand or more, right? But the difference now is that the proportion of the assets, you want to make it back to exactly why it is. Now, the question is, why that? Now, these are some reasons. It helps control risk. Let us see what is happening in the world today, especially considering that Aradel spike. So what happened now is that the current tensions in Iran, they are making crude oil prices to go up. Now, Aradel is upstream, right? So what they do is that they are the ones that collect the crude oil and sell it. So what this simply means is that for exactly the same efficiency, exactly the same assets that they have, exactly the same work that they are working, their revenue will significantly increase. Why? Because the products that they are extracting is now significantly more expensive than what they anticipated. So you may be happy as an Aradel investor, very, very happy, no doubt. But what if something significant still happens to take the oil back down? Remember how oil prices were low and quite stable in 2025. And that is why throughout the starting and middle of the year 2025, the oil and gas index, Aradel, Seplat, etc., they were just there, They didn't really grow exponentially as they are doing in 2026 currently. So you do not want, just because Aradel is doing perfectly well in your portfolio, you do not want Aradel to control the entire portfolio, because just the way it is news, the news of the Iran war, then the oil tankers, etc., can no longer pass that route. That is why the oil price is going up. If something happens, then everything goes back to normal. It means that your Aradel's price may still reduce. So does that mean that you should leave it? Mind you, if you're a long-term investor, you can ignore all these ones. Let's look at the mid-term investors for now, right? So we're also looking at the lock-in gains, which is taking profits. Because now we are seeing that the current exponential gains, especially in Aradel and other upstream assets, are mostly events-driven. Yes, Aradel is a very, very fundamental company. And in 2026, they will do well. Aside from the policies from the government, and other, things worth considering, Aradel will do well. But the present gain that the stock got this week, we all know that it is because of that Iran news, the news about Iran, the Middle East. Peace to them. So what happens is that if you're an active investor, but you decide to slip through it, when the war finally stops and everything goes back to normal, then logically speaking, I'm saying logically because the market may not be as logical as we expect, but logically speaking, the price should slightly come down to stabilize. It also helps you to encourage discipline. What this means is that instead of the emotional investing of each, had it been I knew, I would have bought more. If I knew, I wouldn't have bought this stock. Or had it been I knew, I would have sold this one ever since. Like some Access Bank investors are crying today. You hold Access Bank because you believe that the price of other banks have gone up. This one has not gone up. Then one day it will go up, right? But now, while you continue to suffer with the bank, its peers, GT Bank, Wema Bank, Jais Bank, etc., they're all going up, but we are still suffering and smiling and hoping. We are now automatically long-term investors for the Access Bank. So what happens now is that we have to keep on praying for them. We have to keep on doing whatever we do for them. But if you are not emotional, you are a very, very rational person. As soon as you see that there's a better opportunity elsewhere, you jump to that opportunity and wait until you see opportunity here before you come back here. Mind you, this is not for very long-term investors. As a long-term investor, you can decide to slip throughout the storm, no problem. So these are some reasons why we rebalance, right? So how do we rebalance? Let us analyze each asset individually. So when we're analyzing the assets, mind you, this is practical. So please, if you can look at your screen, very important. We'll consider the downside risk of the stock. We'll consider the recovery speeds, the volatility, the fundamental risks. I'll explain all these ones. Then also the target allocation. So let's go back to, this time we'll be using Access Words here, right? Yes. So for us to do this analysis, let's start with MCN, which is the first. So you can decide to use this risk exposure here, but me personally, when I'm doing analysis, especially for the short term, I do not use this risk exposure. Why? Because it uses 5 years data. This observed effective yield also uses 5 years data. There is somewhere else that gives you the most recent data here in Access Words. So all this data you see here, it wants to play safe. But if you are not somebody who wants to play safe, you want it as it hot, there are still some data sources for you. Come to the technical analysis page. Inside asset versus index, then search for the asset you want here. So this page here on Access Words helps you compare MTN with the NGX All Share Index, which is the index that tracks Nigerian stocks. If you search for United States stock, it would compare that stock with S&P 500. Awesome. So what are we checking? We say we want to check the downside risk. Fine. This is MTN's downside risk based on 1 year data. So from 1 year, when are we using? Look at it from March 10, 2025 to March 5, 2026. Those data in the MTN's page, they use 5 years. So you're looking at March 10, 2021. So that one is not very volatile as much as this one. So looking at the risk level, we are saying that MTN's downside risk is around 34.88. So the question now is that, do I want my entire portfolio, or what's the term, what term can I use now? Can I sleep well at night when my entire portfolio falls down by 34.88? Let me ask the question more intuitively. If I invested 100,000, for example, will I be able to sleep well at night when my portfolio is now showing around 66,000 naira? If the answer is no, then MTN should not have a very significant allocation in my portfolio. The assets that should have a very significant allocation in my portfolio should be the assets with the less downside risk. We can also continue to look more. So this is the worst loss period, right? So starting on October 28th, 2025, then they recovered December 12th, 2025, right? MTN started dipping. Then as of November 11th, 2025, they dipped by over 17%. Then for the market, it was around 9.2%. If I'm just showing you how to analyze some assets, fundamentally speaking, etc. Sorry, technically speaking. And we've also looked at the recovery speed. Okay, the recovery speed is here, number 4. It took MTN 82 days for it to recover a loss of 17.46%. So I'm asking myself this question again. If I see that my portfolio is dipping from 100,000, it is now around 83,000, going towards 82,000, from 100,000. So the question is that how many days can I bear? Can I continue to manage until I see something greater than 100,000 before I will sleep well at night? As of MTN, you are based on the historical data, you need around 82 days. The entire market is around 70 days. So what this is showing is that if for any reason you cannot bear the risk associated with MTN, then you may want to reduce your allocation in MTN. And now I have shown you some reason why, rationally speaking, you as an MTN investor should be slightly scared, because the tensions in the Middle East, increase in fuel cost. So it means that MTN has to buy more fuel, more diesel, etc. to power. Though it's owned by IHS, but it simply means that more expenses will go for the powering of those diesel generators to carry the mass, right? Then if our exchange rate, for example, Naira weakens for any reason whatsoever, it means that MTN's risk significantly increases. Why? Because most of their debt is dollar-based. So we did for MTN. Let's also look at Aradel, right? So for Aradel, we see that Aradel is still beating the market. Great annualized returns. The downside risk, here you go. That is the volatility. Then the worst drawdown around 25.42%. Then its recovery days, 104 days. You can continue to see more reasons why the asset beats the market or not. Now let's look at our favorite stock of them all, Access Corporation. Access Corporation is poor. So while the market in 1 year has given around 85%, like in 1 full year, the NGX All Share Index, I don't mean year to date, I mean 1 full year, has given around 85%. Access Corporation has given around only 6%. If you want to doubt it, search for the Access Corporation here on Access Watch, right? Then look at it here. This that year to date, which you see here, around 23%. Then in one full year, around 8%. That is from March 7, 2025, going back to where we were. Yeah. So as we can see, yeah, Access Corporation has not done properly well for the market. We're also looking at the downside risk. It is still higher than that of the market. Then the asset was drawdown period, 29%. So it actually started on July 23rd, 2025. The deepest point was on November 11th, 2025. So you may notice that we've seen a lot of November 11th as the deepest point. So see another November 11th here. When we searched for MTN, we saw that November 11th. Do you remember what happened on November 11th? That was the period the entire market was scared for this tax reforms where people started withdrawing like significantly. So that is why the entire market dipped. It is showing technically. And since then, the Access Corporation has not actually recovered. So the price that it was on November 23rd, it has not gotten to that price since. But the market has gotten it. What this simply means is that for over 225 days now, we, the long-term investors of Access Corporation, we have been, praying and waiting for God to touch that stock. So that is it. So I've just shown you some reasons, some things to consider. The fundamental risks are more like the crude oil, the exchange rates that I told you about. So these are some things you consider for each of the holdings that are in your portfolio. Can you stomach the risk in these assets? Or if you can stomach it, for how long can you stomach it? Do you understand? Then what are the fundamental risks looking at it? So when we want to look at it on the fundamental risk for Access Corporation, we also know that if things continue at this range, so maybe exchange rate goes up, then Naira weakens, then dollar goes up. Then Access Bank, the bank itself, should have significantly higher profits, due to that one-off gains from exchange rate volatility, right? Then considering that, let's say the tensions significantly improve, it means that oil companies now have more money. Then the ones that borrow money, not necessarily borrow for the long term, some collect working capital, some collect some amount of money from banks here in Nigeria, yes. So it means that those oil companies can now easily offset their debt in the bank. Therefore, the bank will not write those loans as bad debt, right? So if things continue like this, we see that the banks will do well. But the question now is that when you consider Access Bank, GT Bank, First Bank, UBA, Zenith Bank, which one will perform the best, right? We are coming to that later. Now we see that we may need rebalancing in the portfolio. Why? One asset significantly went up, another asset significantly went down. What currently is happening in the world or what happened to the portfolio is not necessarily a long-term thing. It's based on the news that we are seeing, right? So when do you rebalance? If you are a long-term investor, that is, you are investing for 5 years and above, right? You want to rebalance at least once annually, at least just know what is happening. Know the fundamental risk associated with each of your holdings. Know if you can still stomach those risks or you want to reduce the allocation, right? You want to rebalance when major events can significantly affect your entire portfolio. So considering the current holding in this portfolio here, we are seeing that Aradel alone is around 41.11% of the portfolio. So what this simply means is that anything that significantly happens to Aradel significantly happens to your portfolio. I hope that you understand and you agree. That's it. Now you want to consider rebalancing when any asset shifts by 10%. So from 33.3% that they all were, right? If one becomes over, that is, if one grows to over 43.3%, you know that one is telling you that you may need to rebalance the portfolio. Or if another one reduces to like 22 point something percent, you know that one reduces. So at the current proportion, RSL here is not up to 43%. Then Access Corporation is not lower than 23%. So we can say that this portfolio is not ripe for rebalancing. Then secondly, it may be close. Let's watch. But it's still a young portfolio nonetheless. Let's see. Okay, I don't have that yet, right? Some rebalancing techniques. Before I show you these ones, Access what the platform actually have some tips for you, right? So for these portfolio utilities, yeah, you see different features that can help you make better investment decisions. So for example, you can compare your portfolio with the NGX or share index here, or you can find how any specific asset affects your portfolio or not. So I created this different portfolio in another class, but let me just show it to you. So when you click on this, so maybe select MTN, then analyze it, right? Okay, it's not up to 3 months old in the portfolio. So let's use this one to see. All right, so CNGX group here, it is outperforming the portfolio. While the person started investing with around 10,000, the amount is around 32,000. Yeah. So while the entire portfolio grew by 52%, NGX grew by 38%. So what this means is that if this person had invested only in NGX, instead of diversifying for all these many assets, the person would have made significantly more, right? Different things. Let's look at our favorite stock, Access Corporation. So even in this person's portfolio, Access Corporation is dragging the portfolio down. So the question is that what should this person do regarding all these numbers? You can either contact us, like if you're a long-term holder with an annual subscription, the Access World platform, or you analyze the portfolio with AI. You use full portfolio analysis. This quick analysis will just look at the portfolio as one entity without considering the assets separately, right? But the full portfolio analysis will consider the entire portfolio. It will consider all the assets inside the portfolio. Then if there is any need for rebalancing whatsoever, it will tell you what to trim, how to trim it, etc. Not financial advice. It's still more like something you consider and make your decision. Apologies for the delay, perhaps because of network and stuff, but it should load. All right. You see your portfolio summary, the performance overview, the risk overview of your portfolio, how diverse your portfolio is, the dividend overview of the portfolio. Now it is showing you the different assets that you have. So this press could high return and very high annualized yields, etc., etc. But what we want to look at is here. So allocation suggestions, which are here. Gradually trim MTN, Access Corp, Zenith Bank, and rotate into higher alpha, higher sharp, reduce or cap Ella Lake exposure unless you intentionally want speculative agri-risk. Modify, modestly increase allocation to Vet Bank, Okomo, NACO. So it actually gives you, okay, see more, add assets outside Nigerian financials and agriculture to cut sector and country concentration. Why? This portfolio has many agricultural and banking stocks, so it's advising that you should diversify to other industries. So when it comes to portfolio rebalancing, this AI actually helps you with that, plus a lot more, right? But in case you want to do it yourself, these are some tips that you use. You can sell parts of the winners to buy parts of the laggers. Mind you, this only works if all the assets in the portfolio are fundamentally sound. I will not tell you to sell Aradel or Presto to go and buy SCN Cocoa, to go and buy Dunlop, to go and buy FCG Insure. So look at One America Wonder, please. FTG. This is a stock that is currently in the listing watch list. They are not very fundamentally sound, but this year alone, they have made 645%. Then you may want to join them. Are you not shooting yourself on the foot like this? So I will not tell you. So by the time you buy it at this peak, then the real truth comes up, the price starts going down. Then you're asking me how to rebalance your portfolio. Then I tell you that sell the Presto that is doing well to buy more of this one. That is very foolish. That is very, very foolish. So that is not what I mean, right? That is why I told you that we are assuming that all the assets in the portfolio are fundamentally sound. This only applies to fundamentally sound companies. That's it. You, aside from selling, in case you do not want to sell, you can look for more capital, then add to the laggers. So in the case you still have hope on Access Bank, you can look for more capital, then buy more Access Bank. Yes. So that when Access Bank's proportion in the portfolio increases, that of Aradel will no longer be too high, right? MTN has always been in the middle. Then if, for example, Aradel pays you dividends and you see that Aradel's proportion is already very high, instead of reinvesting the dividend back into Aradel, you may consider reinvesting it back into the laggards in the portfolio. In case you want to really look at diversification, right? Consider using the dividend that you receive from stocks, etc., to buy some real estate investment trusts, commercial papers, etc. Why do we say that? Come to Access What Hall of Fame, right? Then in the industry, let's consider real estate investment trusts. These are companies that either invest in real estate or infrastructure stuff. So let's look at this Nigeria infrastructure debt funds. This one, view details here. What are we noticing here? The price, if not for, I think 2 days ago, the price has been relatively stable, not moving at all at all. So what this means now is that no matter how bullish the market is or bearish the market is, this real estate investment trust is quite stable, but they pay high dividend, 17.51, as you can see. You can use the same for others, right? So you want to consider these or bonds or mutual funds that pay dividends as the rest of that. Yeah. You may also want to consider reconstruction. So reconstruction is similar to rebalancing, but it is whereby you are removing some of the original assets in the portfolio and changing them to something else. So maybe you want to change Access Bank to another bank. So maybe GT Bank, Zenith Bank, etc. Sorry, hold on. Let me see. Let me try to compare Access Bank and GT Bank. Let's see. Let's see why the market is really favoring GT Bank over Access Bank the most. So when we look at the revenue, Access Bank has higher revenue. Looking at the profit margin, GT Bank has significantly higher profit margin. Looking at the PE ratio, now GT Bank is significantly higher. Price to book, GT Bank is significantly higher. Let's ask AI to see what AI will say about the two companies, because they are both tier 1 banks. So, we have Fugaz, FUGAZ, First Bank, UBA, GT Bank, Access Bank, and Zenith Bank. These are doing well. So we are comparing them with AI. You are seeing their strengths, their weaknesses. Head-to-head comparison. So GT Bank has the higher profit margin than Access Corporation, indicating superior. Let's just go to the final verdict. GT Bank is the stronger overall choice for you, combining superior profitability, higher returns, and a richer dividends with only moderately higher volatility. Access Corp is cheaper and larger by assets, but its weaker risk-adjusted performance and lower income makes it less compelling. If you want quality and income in Nigerian financials, GTCO is the better call for you. So you have seen some reasons why GTCO is superior. If you want to know the risk, you can read this one, but I hope that you've been following up so far. So basically, this is it. We did the practical sessions for you to know when you should rebalance, why you should rebalance, and when it's time to rebalance, how to rebalance, which are these ones here. We have shown you how to find fundamentally sound companies. We have also shown you that when you want to sell the winners, you can either take profits or use that money you've collected and buy it to the laggers in the portfolio, ensuring that lagger is still fundamentally sound. So you don't want to sell your Cresco to buy one rubbish stock. If you do that, it's not me that advised you. So we also saw, basically, this is it. Does anyone have any questions or comments? But before that, always remember that if you want to rebalance, you can either use the AccessWorks platform to do, or if you're a long-term investor and you have the annual subscription, you can reach out to myself or Benita, who will gladly assist you. We are chatterds. We can assist you and give you the needed tips for your rebalancing. So thank you so much. Joshua, over to you for the questions.
Okay, thank you so much, Rona, for a very insightful class today. We'll move over to the questions that was asked in the group. And
No, does anyone have any question?
okay, does anyone have any question first of all? Let's start from there. You can just raise up your hands or you can unmute and speak. Okay. In the absence of any question, we move to the question that was asked in the group. The first question says,
Someone raised their hand.
okay,
Sorry.
somebody, Yusuf, you can unmute. Hello?
Hearing me now?
Yeah, we can
Yes.
hear you now.
So my question is that I've come some investors that only invest in stable companies like big companies like GT, Presco, Seplat and all. And I think and because I'm kind of new to market. So and I think company like small companies are I think company like small company are the one that can really make you richer in the long run. So I'm asking that which side is someone as a new investor should choose investing in stable company or risking smaller companies.
You are a brand new investor, like you rightly said. So if you are new, why do you want to take risk? So the reason why people who are mature in the market, they can take more risk is because they know when to sell. Like, for example, I told you how the news can affect Access Bank. I showed you how the news, if it continues, can affect MTN. Also how it can affect Aradel. All these companies are large companies. If you have not been in the market for a long time, you will not know how the news affects those small companies that you hold. So see one example, let's search for Mikio, for example. Now Mikio is even a fundamentally sound company. Yes, it is fundamentally sound, right? Let's use the technical chart or even look at, see, this year, minus 5 point something. Now, mind you, the company did well, though. When we started this year, where was it? So see 2026 now. So it entered 2026 at a price of 65. Then it peaked at around 103. That's where it peaked. Now, what is it? 61. So as you can see, this is a small company. But you know, the dividends that they paid, they announced the 32 kobo dividend. It's quite small. So if you say you do not want to invest in the very large, in fact, I think Mikio is even a large cap company, but in terms of price, I think that fits in is higher than it. So when you are investing because of speculation or fear of missing out, as the case may be, you may not know when to sell, but people know when to sell. People who have been in the market for long. As a new investor, this is the time that you learn. So usually you should not even be investing in stocks, to be frank. You should be investing in bonds, commercial papers, etc., until you understand the stock market. But if you must invest in the stock market, you want to invest in stable and long-term companies, we can actually do that. So let me just give you a tip, right? Here in Nigeria, the economy has now kind of stabilized, right? If not for this current news of these tensions in the Middle East, the economy has kind of stabilized and we are expecting a growth. So when the economy grew, all the sectors in the economy will benefit. So if you invest in the larger cap companies in each of the sector, your portfolio may likely do well. So come to the Hall of Fame page, right? Using market capitalization, if you select agricultural services, see Presco and Okomo Oil, they are the larger cap, 2.7 trillion, 1.6 trillion. You move on to the next conglomerate. This is Transcorp, this is Custodian. You move on to the next construction/real estate. This is Julius Berger, this is UPDC. You move on to the next, consumer goods. This is BUA Foods. It has free float issues though. This is Nestle. You move on to the next. What's the next one? Financial services. This is where you see GTCO and Zenith Bank. So for now, right, focus on the larger cap companies. Then when you understand the market very well, to know how a specific news will affect a specific company, by the time you are now one with the market, you can now take the risk by investing in those very volatile companies. I don't know if that makes sense.
Yeah. Yusuf, does that make sense?
Thank you very much, sir. I really appreciate
Oh,
your, your advice or your mentor. Thank you very much.
Thank
okay,
you.
thank you. Kabri, Abi Kabai. I don't know if I pronounced it very well, but yeah,
Good afternoon. Actually, it's
yeah.
Kabir. Can you hear
Good
me?
afternoon. Yeah.
Okay.
All right. So thank you for this session. It's a very is an insightful one, and I would appreciate that. But I just have a quick question around the use of this asset worth platform. I recently joined it when I found a link to it on a Twitter platform that I belong to. I've been actually looking around the platform, and I've seen some utilities that are very, very well, that are of good use to me. Let me put it that way. But I want to ask these portfolio utilities that you use to do some analysis, not quite long. So when I try to use it, it's just showing blank. Is it that I have to be like a year subscriber before I can access the portfolio utility? Although I
No,
have once
sorry.
funded and even have access, but what I do most time is pay as you go, right? Is that what you call it? I just fund it. Yeah, pay as you go, exactly. That's what I do most of the time. But when I try to use the portfolio utility, it's just showing.
Yeah, sorry. Looking at the screen, this is what you see, right? Something
Absolutely,
like
yes.
this.
That's what I
Yeah,
see.
so
Yeah.
it is telling you select a portfolio with the filters above to reveal the different utilities available for you. So the reason you are saying this, you have to select the portfolio you want to analyze. So look at this filter, which is showing all. Click on it, then select the portfolio you want to analyze. You'll see all the features available for you.
Oh, I see. I was actually looking for where to select the portfolio. So I was thinking probably maybe because my portfolio is young, because I usually get that kind of feedback that maybe I should hold my asset for 1 month or 2 months before they can give a recommendation or sort. Okay, so it's fine. Thank you. Thank you.
Thank you. Yeah, thank you.
Okay. Thank you so much. Is there any other question? Okay, so we move to the one that was asked in the group. The first question says, is it safe to invest into the stock market considering the rumor of war everywhere?
That's an interesting question though. If you are a new investor, if you are like a brand new investor, this may not be the best time to come into the market. Why? Because when you come into the market now, you see the likes of Aradel, Seplat. Excuse me for a minute, please. Research market movers. Then I'll select this week. Right. So we are seeing Itana, we are seeing NGX Group, we are seeing Aradel, we are seeing Oando. So simply speaking, I believe that the companies that you know here most of the time, you surely know Oando, you know Itana, that's our filling station, Aradel. So when you see all these companies doing well in this period, you may want to jump right in to buy, not knowing that the gains, like we rightly mentioned, may be short term or based on the news that is going on, right? So you do not want to take that risk. However, if you've been in the market for long, you will wait to see the stocks that you can buy on a discount. So usually if the market is a very rational market, a very, very rational market, which stock am I seeing here? This USCN, okay, no, USCN is fast moving consumer goods. Okay, this PZ, if they handle some logistics in their product and some things, it should be affected. This paint, this premium paint that is here, the cost used to make their paint should go up, except they want to sell. So why is the price significantly in improving when it should be stable or decreasing? So these are some things that a long-term investor will consider to see what stocks can I buy on a discount. Looking at the losers, see some losers here. Okay, look at this Jais Bank. It is currently down. Why is it down? Can I buy it now? But a new investor will say, if in only 1 week, this popular bank has lost 18% of people's money, I will not buy it. But a long-term investor will say, this is the time that I'll buy this stock, or they will even pray for the price to come down even further before they buy it. So if you are a brand new investor, I'll tell you to wait a bit. Just continue expanding in your knowledge and everything. Thank you. Joshua.
Okay, thank you so much. That's a very important question. Putting into consideration what is
I
happening.
think someone raised their hands.
Michael, I think you can unmute.
Okay. Good afternoon. My name is Michael. I have a question. My question is, I started investing last year when I got into service. So I've been following the Nigerian stock, but I was thinking that all this, as in, I was looking at the chart, so I was assuming it to be like more of a forex trading where you wait for a return to a zone and you buy. So I didn't understand it. I saw MTN move from 250 to 500. I won't mad. But now I want to understand when do I need to buy, like get into a stock, because this year now I have all my money stacked and I'm waiting. And now MTN is still moving. Like I didn't get in. I was waiting for it to still make that pullback. I'm still using the same mindset I'm using to trade for it. So
Yeah.
I don't know.
You.
I'm still waiting for a pullback, but it's so when am I supposed to get in? I've checked with I've discussed with ChatGPT and he's saying you can buy at any time. He didn't give me a specific month. So I want to understand.
Let me explain a bit. Thank you so much for that question. This same thing happened to someone yesterday. So what happened was that I think last week or a few days back, let's just say some days ago, right? There was somebody who, he has actually done annual subscription on Access platform. Then we were discussing. Then I told this person that considering where 2026 is heading to, invest in NGX Group. Invest in NGX Group. The person said, thank you very much. Now, this same person went to consult with someone else. Do you know who the person went to consult with? The person went to consult with a Forex and crypto trader. So when the Forex and crypto trader brought his own idea, into the stock market. Let's go to NGX group. So we'll see it. Let's search for NGX group. So when that crypto person came to the NGX, then look at the chart now. Look at the chart. I don't know. Okay, it's becoming clearer. So yeah, so we know that a forex trader or a crypto trader will want this stock at least to pull back. Maybe if it can pull back here, or it can pull back here. So I'm trying to look at some support, right? Or maybe it can pull back here before they'll buy it. But the thing now is that you need to understand the core fundamentals. Why are stocks different from cryptocurrencies? Or why are stocks different from currencies generally? Sorry, did anyone say anything? All right. So it's just like the currency. So you are a forex trader. So let me answer you like a forex trader. It is just like the currency of Nigeria against the currency of the United States. In as much as speculation pushes or moves that Nigeria versus USD or USD versus NGN, we also know that Nigeria's importation, exportation, inflation rates, interest rates, all these macroeconomic metrics, or let's just use all these macroeconomic principles, they are what actually affect the market. And that is why we have the CBN authorized exchange rate. Then we also have is it black market or parallel market, which that one could be higher or lower according to speculations. Do you understand? So there are some fundamental things that affect price movements. In the case of cryptocurrencies now, it is mostly speculation. Yes, some crypto people will come today and say that some cryptocurrencies, they have utility. So maybe Bitcoin is the coin that is used for the blockchain. Then the more the blockchain is, so the more people operate in the blockchain, the more value Bitcoin will have. Then they'll tell you the one for Ethereum, etc. But we don't see all these ones playing out. Because if you want to check, if you have a way to check the correlation between blockchain activity and Bitcoin prices, whether going up or going down, you see that there is no correlation like that whatsoever. So what really is the fundamental thing? So for example, the United States of America, they says that their US dollars is backed by the golds. They have like a lot of golds. They also said that, or a lot of persons say that the US dollar is backed by the US military, and you are seeing that their military is superior. So if they tell you that this is what they want to do to you, they will surely do it to you, right? So these are some things that when the US dollar is coming, it is like a big boy. So if Bitcoin is coming or Ethereum is coming, what is that thing that it is carrying with it to make it a big boy? Now, this same question, let us bring it into the stock market. When you see all these prices going up and going down, what are those things that should actually influence it? Forget about speculation for now. It is the company itself. So for the purpose of this Nigerian Stock Exchange, we are looking at how profitable this company is, cash flow, how likely can this company produce money. Let me throw this question to the house. You must not answer, but let me throw this question to the house to people who have been investing. This NGS group that we are seeing here, will you see this from 150? It drops down to 135, and you will not buy it immediately. Me personally, I will buy. There are some persons today, they are waiting for MTN to pull by only 10%, by only 15%, before they will rush and buy it immediately. So why? Because they know that this company is fundamentally sound. They know that this company generates a lot of cash flow. Now, in the case of MTN, see where they are heading to. This, they are Fiber X. They are not even done. They are still taking it to different assets, and people are anticipating. In the case of this Nigerian exchange group, Dangote Cement is coming. Dangote Refinery is coming. Where will Dangote Refinery list? Nigerian Exchange Group. They will pay Nigerian Exchange Group. By the time the entire market is doing buying and selling, they are hyping that refinery. Who will get the transaction cost? Nigerian Exchange Group. So if you are waiting for the price of this company, of this stock to pull back like a speculator, you want the price to come down. I am telling you that there are some investors who look at only fundamentals. They know that if they buy this stock now, knowing fully well that see the dividend is even coming with bonus shares. So my brother, a speculator will wait for a pullback, but if you are a fundamental or long-term equity investor, will you wait for a pullback? Yes or no? Hello?
Hello, Michael.
I heard you very well. Well, I will stop waiting for speculations. I will start. So I will say the Nigerian stock is basically moved by more of news and what the company is about to accomplish. Let's say GTCO is rolling out a new loan platform or a new loan format, or they are trying to empower the youth on something, or they are trying to create maybe an industry, like build an industry. They will gain more from it. So it's basically what they are getting into. Okay, like last month I got the information, I got the news that MTN bought complete percentage remain in the American Distant Tower,
IHS.
IHS
Yeah.
Tower. So that news alone can push the price of the stock.
Yeah.
I
Although,
understand now.
mind you, it is the MTN Group Africa, not MTN Nigeria. So we are looking at how that acquisition, though the acquisition is not fully finished now, we are looking at how it will affect MTN. So maybe they can pay lower rents, etc. However, note that there are some meme stocks. So there are some stocks even here in the NGX that are traded for speculation, for speculative purposes. Look at those penny stocks, the ones with high volatility. You should let's see if we can find them. Coming to fundamental analysis. Sorry if we're taking time, General. You know what? Yes, you can ask in the community if you're in the community for examples of meme stuff. We can find them. But thank you. Yeah, hope you are clear now.
Yes, I'm clear.
Awesome. Thank you, Joshua.
So concerning the question you asked, I won't wait for a pullback. I will buy immediately. And what I'll rather do is do cost dollar cost averaging on the Nigeria Stock Exchange. Thank you.
Yes, thank you. Yes. So if you are expecting monthly or weekly money, like maybe your salary or your stipends, however you receive your money, right? You can now say, I have like 200,000 to invest to, but this stock, I think that the price is too high. So what I will do, instead of buying the 200,000 all at once, I can decide to put maybe 50,000 in 4 different weeks or 4 different months, or 20,000 in 10 different weeks or 10 different months, however I want to do it. Thank you so much to the person who raised that just now. Thank you.
Okay, thank you so much. The next question is, what's the best strategy? I think most of the question this time is about war and geopolitics. So the next question says, what's the best strategy during geopolitical tension when portfolio lose value as a result of war?
All right, so it's a good question. I believe that we saw the news that Donald Trump's son, he bought around $30 million worth of crude oil before. I don't know if the news is factual or not, but let's just assume that the news is factual. He bought $30 million worth of crude oil before the war in Iran, because they know that if that war should continue, should persist, crude oil price should go up. Right. So what happens is that he knew that considering this war, this crude oil should be in the discount price. So like he's buying it at a low price, right? So you want to use that mentality when you are investing. There's someone on Twitter, Rufy B. I believe that we all know Rufy B, or many of us know Rufy B on Twitter. There is one post that he sent last year. If you check, you should see it. They say that real estate investors, when a real estate investor, for example, who knows that this land is very, very solid, if the price of the land for any reason should go down, he will happily go and buy more of it. But when you look at equity investors, that is stocks now, when you see the price of your stock or the price of your portfolio, the worth of your portfolio going down, instead of you to use that same happiness that the real estate investor used to buy more, use the same happiness to buy more, you will now be scared. Remember that when we started this class, we gave the assumption that all the assets in your portfolio are fundamentally sound companies. So just because of the little news that is happening, it could affect the stock for maybe 1 month, maybe 3 months, maybe 6 months, or maybe even 1 year, as the case may be. But the bottom line now is that the company is still solid. If that is the case, when the price goes down, you should look at that price as maybe a discount price. That is if you are a long-term investor and you can weather the storm. Or you can decide to just leave it if you did not sell. If you are a very active or aggressive investor, you can decide to sell immediately. That is, sell the stocks that you feel can be negatively impacted. If you feel like you are still actively in the market to know when to buy. If your strategy works for you, fine and good. You can decide to leave everything and do nothing. So it's totally up to you, but you just have to be intentional with what you do. Yeah.
Thank you so much. Thank you so much, Rona. I think that answers that question very well. The next is a review of the various stock groups. Okay. He said a review of the various stock groups to enable me reallocate funds to yielding stock. So I'm assuming the person is asking for a review of the various stock groups, so as to enable him reallocate funds to stocks to yielding stocks.
Okay, I think we consider that, because I don't really understand the question very well. But if it's by industry, I showed you during the session on how to see different stocks according to the industry. Then if it's by dividend, I showed you, let's come to Hall of Fame, right? Select dividends, you'll see the high dividend payers. That is, people considering high dividend payers. You'll see them here. Then if it's effective yields, you can also select effective yields. You see them here, but mind you, high effective yields could come with very high risk exposure. So you need to know what you are doing. Look at the risk exposure, very, very high. So yeah, it's according to the type of investor that you are, though. But yeah, I wish I understood the question even more, but no context. So let's move to the next.
Please, what stock can you recommend to me in times of war?
Go and pray. In times of war, go and pray for the people of the Middle East. Don't look for stocks to invest in. Although the class here during the session, we looked at the stocks to consider. Please excuse me, I don't know. Just give me a few minutes, please. Let's see if I can. There is something that we posted on Twitter. Apologies for the disruption. I want to see if, because I think it's important, if we can see those industries that are there. Just okay, I think let's see this one. All right, here we go. So when this was started, Access was posted this. So we posted this, the industries that may be affected. So we looked at the oil and gas upstream. This is where Aradel, Seplat, etc. fall into. So higher oil price is equal to higher revenue. Then we looked at the banking sector. Stronger FX inflow can help banks and improve credit growth. So we look at the industrial goods and manufacturing. So the higher energy and import costs will hurt their margin. So these companies in this industrial goods slash manufacturing, coming back to Hall of Fame, right? Coming back to Hall of Fame. Let's select, I think there should be industrial goods somewhere. Yes, industrial goods. So these ones, because you know that for Dangote Cement to operate, they need energy, like well, they need logistics to transport cement. So and fuel price has already gone up. So logically and rationally speaking, in as much as we are expecting higher revenue, the expenses international, not just nationwide, should also go up, right? We are looking at consumer goods. So you can check this post later for some insights. Thank you, Joshua.
Yeah, thank you so much for that. The next question says, hope the low income earners will be highly considered. That is to rebalance portfolio.
Yes, now we show you how to rebalance portfolio. It doesn't matter if you are a high income earner or low income earner. You can rebalance your portfolio. Yeah.
Is rebalancing necessary and why?
If for a very long-term investor, right, rebalancing is very necessary. So let me give you some examples. Coming to Dunlop, I believe that we know this company, right? So this is a company that I think 20 years ago, so many years ago, some persons bought it, but they did not continue with the market to know the risk associated with the company. And now it is around 20 kobo. And this is how it has been for so many years coming now. Aside from download, we have the issue of MRS, although that one took a lot of us by surprise because the stock was doing well when Dangote Refinery partnered with them. Then all of a sudden, they said that they want to unlist from the NGX and go into the NASD, right? What about ASO Savings? I think ASO Savings is still here, right? Although not no data whatsoever. But even before ASO Savings was delisted, it's not even, yes, Abby? Was it delisted? Yes, it was delisted from the exchange. Then they also lost their license from CBN. If you follow this ASO Savings in this Access SWOT platform, you would have seen that the company is not fundamentally sound. Its book value was significantly negative. So many things wrong with it. So a lot of persons got stuck. There are still some persons, even in Access SWOT, who fails to sell when Access SWOT wants them to sell. So what happened now is that if you do not follow up with the market and you do not rebalance, the risk associated with all these assets that you hold, especially when the assets are in a very high proportion in your portfolio, that risk can affect your entire portfolio. Now, let's imagine that someone invested 1 million and around 600,000 of that money is in this company. What do you think would have happened? So yes, rebalancing is important. Thank you.
Thank you so much. The next question.
Sorry, someone raised their hand.
Festus, your hands. Please, you can mute.
Hi, good afternoon.
Yeah,
Good
afternoon.
afternoon.
So I started using Asset SWOT. I've been in the group for fairly long, I think a month, but I created a portfolio with it about 2 days ago and all that. And I think I noticed when I'm adding assets to a portfolio, it does not account for the commission I pay on that asset.
Oh, okay. Apologies for that. So what we consider from the start is that you personally should actually add that commission. So let me explain what I mean. Let's assume that I set a limit price to buy Access Bank. I don't know if you can see me, but I'm with my calculator here.
Yes.
So let's assume that I set a limit to buy Access Bank at 25 naira per share. Now, when I do all the plus and minus for the brokerage commission, the exchange rate commission, all the commission, I saw that it was around, 1.5%. So I'll simply ask that 1.5%. So assets times 0.15, right? Sorry, yes, apologies for the delay. So it's around 25.4%. So you should actually consider, because the point of the fees is that we add the fees to the price. So if you were meant to spend 100,000 on a stock, then because of the fees and everything, you spent 102,000 naira. Just divide that 102,000 by the number of units that you bought. That will give you the gross amount you paid, both for the stock itself and all the fees and commission. I don't know if that makes sense.
Would it not be easier to just add a field for the commission, like Yahoo Finance and investing.com?
All right, we could do that actually. Okay, if
Yeah, I
that's
think that
what.
would be the best way to go.
All right, we could do that. We'll see. Take notes. Thank you.
Okay. Thank you so much, Festus, for that. The next question says, please, how do I get access to my portfolio?
How exactly?
I just there's no
Okay, so if
context.
you need access to your portfolio, if you mean the technical way, you come to just select. Okay, someone raise their hands.
Ayola.
Yes, thank you so much. Thank you for this wonderful presentation. At some point, I got cut off and I tried to rejoin again. My question is that I'm trying to look at the frequency in a year. Two questions in one. The frequency is how many times do I need to do it a year? Is it every month? Is it every quarter? Is it when I feel the economy is changing? That's one. Then two, what is the impact of ETF on your portfolio? What are the risks? What are the rewards? I don't know if you get my questions right. Thank you.
That's a very good question. So if you are a long-term investor, like at least once per year is actually fine. Then on special occasions, so maybe when you look at the war happening, then you see that your portfolio is significantly and negatively affected, right? So how do I explain this? Okay, come to portfolio tracker. Yeah, we are still in this forward ever. So we are seeing all these volatilities in the portfolio. So let's look at this. So this day, the portfolio moved from here. This was kind of like a significant spike. So if I really want to analyze this for myself, I will find the asset or the group of assets that cost this thing. If it is maybe all the assets that cost it, I can know that it is a market-wide occurrence. But if it is only one asset that costs this thing, I'll now ask myself, this risk associated with this asset. So when I say risk, I mean downside, right? So this risk in this asset that costs this for the entire portfolio, is this something that I want to stomach or I want to reduce my allocation for that asset? So for an aggressive or active investor, these are some things that you consider, but usually at least once annually. For some funds managers, especially those that pay dividends quarterly, right? They actually look at the portfolios quarterly. Now, you also want to consider fees. You know that if you decide to be rebalancing regularly, it means you have to be paying all these brokerage fees, both the buying and selling. So because of that one, it may not be ideal for you to reallocate or rebalance monthly or quarterly. So maybe once annually, twice annually, or once every 2 years, if that is fine by you, fine and good. Now, the impact of ETFs thank you for that question. So please look at my screen, everyone. Let me show you one America wonder once again, right? So if you search for, this is SPY, this is the ETF that tracks the S&P 500. We also have the VOO, right? This ETF tracks the S&P 500, right? So now let us compare these ETFs with the S&P 500 itself. So research, technical analysis, assets versus index. Now SPY, similar returns as we can see. But the main thing I'm going to look at the correlation. This is when you see a correlation of 1, it means that the specific asset you're analyzing moves exactly like the market you are comparing with. So this SPY ETF, as you can see, it has a perfect correlation with the market. Now let's do the other one for the VOO. Coming to, where is that one? Perfect correlation with the market. So you are saying that these are actual ETFs that track the market very, very well. Now let's do that for our own Nigerian ETFs now. So let's start with Stanbic ETF 30. So this ETF tracks the 30 largest companies in the market, and this NGX 30 is very, very similar to the NGX All Share Index. So even if we do not expect a correlation of 1, we want something that is similar to 1, not similar to 0. When we do this, look at the correlation, very, very close to 0. So if a statistician looks at this number, the person will say that this asset has nothing to do whatsoever with the S&P 500. Let's look at Bank, the same 30 again. So these are some questions that we'll now be asking. So this one is slightly more correlated with the market, but it is still closer to 0. So a statistician or someone with eyes in the market will now be asking, how can an ETF that is tracking the market, how can that ETF have, you understand where I'm heading to? Even going, because I think this year the NGX All Share Index has returns close to or around 25% or so. I don't have the figure. But when you search for maybe this Stanbic ETF, look at it year to date. So year to date, you are seeing 200 and something. So this doesn't make sense. So the answer of the question I am giving to you, sir, I don't remember your name, but the answer of the question I'm giving to you is a rational answer. It is a textbook answer. It is an ideal answer, how things should be. It is not based on these figures that we are seeing here. So the reason why you may want to consider investing in the ETFs is that it should give you that automatic diversification. So instead of you to buy 20 stocks at once in your portfolio, or some persons want to buy all the stocks all the 30 largest stocks in the market, they want to have all of them. Instead of that one, just buy this ETF or the other ETF. Just buy one ETF. Or instead of you to buy all the stocks in the S&P 500, just buy the S&P 500 ETF so that you already have that automatic diversification. Then you can use the remaining money that you have to focus on the best performing stocks. Do you understand? So now you can just have 3 to 5 stocks in your portfolio, then 1 equity funds, 1 ETF. Do you understand? So the purpose of ETF is to give you instant diversification. But Nigerian ETFs, so now I am giving you the answer, the reality answer, not the ideal answer. The Nigerian ETFs, considering that even me, I cannot authoritatively tell you where they are heading to. And I know that their free float is low, so the ability for you to sell when you want to sell can be hard. Or the ability to buy when you want to buy can be hard. I won't advise anyone to buy for now, but let's just continue to watch and see. But yes, we do have ETFs. You can come to the Hall of Fame page. Instead of stocks, select ETFs. You see all the ETFs we have in the country. If you select United States, you'll see different ETFs in the market and what's the track. Thank you so much. I don't know if you are clear now.
Yeah, thank you so much. That's better.
Awesome.
Okay, Festus.
Yeah, sorry. I think another issue I had with the Assets Worth platform yesterday was being able to edit a stock I added. I could not, and I had to delete and then I had to enter it again anew.
Awesome. Thank you so much. So the reason why you can delete, but not necessarily edit, is that the technology behind this our portfolio tracking is similar to the technology that banks use. So usually you know that your transactions in a bank, except it is the bank that reverse it themselves, you cannot just go into the app, then reverse it by yourself. You can only tell them that something was wrong with this transaction. They should check. then they reverse it for you. So we are still using that very strict technology, because if we do not do it like that, it means that some portfolios should be having some wrong figures. So yes, you wanted to edit it for a good reason. So maybe you made a mistake. But what if your portfolio is already worth 200,000 because you have 300 units of so shares, and you bought maybe 100 units one day, another 100 units another day. Then you want to edit that one of the second one. So maybe 105 units. So all this back and forth, just not to disrupt anything. We just made it easier or better for ourselves and for you. So delete, right? Because if you want to edit, it can actually cause some damages that some people can use negatively for themselves. Apologies for that, but yeah.
All right, thank you.
Ayala.
Okay, thank you so much. Sorry, I just remembered something. If you can clarify it now, I noticed that the percentage on the trading app, when I compare it with the percentage on access worth percentage, I notice the discrepancy where that is concerned. Where is the difference coming from? The value
For
of the
which
amount
stock?
remains the
For
same.
which stock?
No, I mean the entire portfolio. Like if you like me, I have a portfolio like Afri Invest. When I buy all the
Oh,
stocks and put it there, the value of the money, everything when I input it is the same. But I notice the percentage calculation is different. I don't know whether, but I check again to be sure whether the figures are different. They are the same figure, but the percentage, you might want to take a second look at that percentage, or if there's any reason why there's a difference, you let me know the book
oh,
value
all
and the
right.
value, the percentage of capital appreciation. It's
All right,
different
thank
from
you
what
so
you have on
much.
the app.
So that is actually because someone who uses Meristem actually told us that stuff. Then we had to work the person, like we did everything manually, because the person had to print his statements from the Meristem. So we looked at the entire amount this person has spent for capital appreciation wise. We also looked at the entire amount this person currently has in the portfolio, right? Except your portfolio has mutual funds. That may be different. I'm coming to that. But if we are looking at stocks specifically, right, you want to do that analysis to see which is correct. And just as that other person saw that it was assessed that is correct, you could also check. Something that could cause that is that we assess what we use real-time figure. Our data is real-time for the stocks. So for the stocks, the data is real-time. So as soon as the price change, the prices on access what change, then the proportion should change. So for your own, maybe you just want to, apologies, if you can do it for one stock specifically, just know what specifically is the capital appreciation rate for this specific stock. Then you should know the one that is correct. Now for the mutual funds, come to research here, then see mutual funds, right? So select anyone, so maybe dollar funds. Last updated February 27th. This time the last updated March 5. This Naren Beja dollar fund last updated February 27th. So what happens here is that if you are tracking a mutual fund in your portfolio, the figures may not be exactly real time. And the thing is that it's the data source. So we assess what it's not as if we are working to each and every one of all these platforms to ask them what is the current rate. There is a data provider, and for now, the data provider is lagging. So apologies for that change, that slight break in transmission. But as we told some persons a few days ago, we are working on the feature to make them as real time as we can. That feature should be out pretty soon. But for now, so this could be a reason why it could be different. I don't know if that's clear for now.
Yeah, thank you so much. Please, if you can share a number, maybe that I can speak to later. I'd like to have one-on-one. Thank you.
All right, so you can actually, where is that stuff? Support. If you reach out to us via the support or see some phone numbers here, right, we will actually give you the next steps to follow. Nonetheless, here are some phone numbers, both Benita and Elijah. You can contact, I am Elijah, so you can contact myself. me. So we just try copying it now, then you can reach out. Thank you. Joshua.
Okay, thank you so much, Ayola. The next question says, what quarter of the year is best to buy stocks?
Okay, sorry, Joshua, because of time, after I answer this question, this one should be like the last one. That is the next one after this one should be the last one. You know, because of time, the time is already fast spent. So the best quarter to buy stock, right? For me, if you ask me, different persons will have what they consider. But if you are a very safe investor, it is very easy for you to predict the stocks that will do well in quarter one. If you are a safe investor, I repeat again, it is easier for you to predict the stocks that will do well in quarter one. The reason is this, especially here in Nigeria, where a lot of investors are not very sophisticated. You can easily know the companies that will do well in quarter one because they will be releasing their financials in quarter one. Now, if you have been following their financials in the previous year, that is their quarterly financials from Q1, Q2, and Q3, you should know the companies that whether they decide to flop in Q1, Q4 or not, they will still perform better than they did in the preceding year. So if you can check our YouTube page, just go and watch the video on how to read financial statements. We use MTN as an example. So even before the market was joyous for MTN, that wow, MTN is now profitable, we have already known that MTN is coming to this. MTN will pay dividends. MTN will do that. So for the purpose of your safety, for the purpose of easier prediction, I'll go for the starting of Q1 or the ending of Q4. If you want to go for Q4, to invest in Q4, you want to invest in the dirty December stocks. So these are stocks that you expect them to do very well in the month of December. So maybe hotels in Lagos due to dirty December. The companies such as NACO, Nigerian Aviation Handling Company for the aviation space. So these are some companies that in the month of December or Q4, they should do well. Thank you. Joshua, just one more, please.
Okay, I think that would be it. But we have a whole lot of questions in the chat box. So I think that will be it for time purpose.
Okay, so let's just ask if any one person will ask question. Just
I have some.
Let's go with Yusuf.
Please, I just come across access words and I don't really know what they are about because I am in WhatsApp group and that person just posted this chat this Google Meet link and I just joined. So what is access word about?
Okay. Did you just join the class? Sorry.
Yes, I just joined it and I joined it maybe after 10 minutes when it started.
Okay, so you followed up. You saw the different features that we saw in Access Watch, right? Did you see the features?
I actually joined when the first introduction was about to end. So I didn't hear the introduction.
Yes, I know, but like during the class, while the session was going up, when we did some practical sessions, did you see those practicals?
Yes, I saw everything.
So Access Watch is simply a platform that wants to help you to make a better investment decision. So before you buy any stock, you search for the stock on Access Watch to see if it is fundamentally and technically sound before you enter. Then Access Watch can help you track your portfolio. You can use our AI to analyze your portfolio, etc. Then if you want to see more happening in the market, so we have this research tab. Clicking on calendar, you see everything that is happening, who wants to pay dividend, etc. Clicking on Hall of Fame, you can rank all the companies by market cap, by dividend yields, by whatever you want to rank them on. Looking at fundamental analysis, you can screen to find the best companies. So if you want to invest like Warren Buffett, you can see companies that will match him. Clicking on insider trading, you will see the insiders that are buying or selling stocks in companies. So AccessWhat is simply a platform that can help you know what is happening in the market to make better investment decisions. And I believe you've been following up. If you want to join our community to learn better, click on this Get Started in the education page, select community, then you can join the group you want to join. From there, you can understand better. Thank you.
Thank you, sir.
So before we leave, I think Ayola, just make it brief.
Oh, okay. Thank you so much. I didn't know my hand was raised. Okay, don't worry. Since I got the number, I can always follow up. I think it's
All right.
something that
Thank you.
I want to discuss one-on-one. Thank you so much.
Oh, okay, yeah, thank you so much. Okay, so that brings us to the end of today's section, and we thank you so much for showing up. And we want you to take your investment journey very serious and assess what is going to be there to hold your hands through the process of all this. And yeah, so thank you so much. Thank you, Rona. Thank you, everyone.
Thank you, everyone, and take good care of yourselves. Bye for now.